I want to ask you about the next crisis, because a lot of people are looking back and saying, if you consider what took place, were the seeds now sown for the next crisis, for the next downturn. And one commentator was pointing to China, where it tried to sort of steer away from export markets, create a big domestic consumption story. Now you have excess credit taking place in China. Others are looking to the US and saying, with all the cheap credit out there, auto, student loans, some areas of pockets of the market that could be a trigger for crisis, and even asset markets. Where do you think the next crisis comes from?
So I don't think that the next crisis is going to look like the last one, you know, in the sense of the world isn't as leveraged as it was back 10 years ago. Now, you talked about China. Okay, now is there a debt problem in China today? Yes, there is. Is China another Lehman Brothers? I would argue probably not, because most of the debt in China is held in China. It's not like mortgage-backed securities that were held all over the world 10 years ago. Now, if China has, you know, a hard landing, clearly the world hurts because of that in an economic sort of sense, but it's not the same sort of, you know, just flush like it was 10 years ago. And then some of these other things talk about, whether it's student loans or auto loans, those are smaller sorts of deals than the whole mortgage-backed subprime thing was 10 years ago.
Tom, where would you pinpoint the next disaster coming from? Where will the epicenter be when it happens?
I agree with Jay. It's not going to be what we had in the GFC, where essentially you levered up the system in one of the largest markets in the world in terms of the U.S. mortgage market, and you had a fail. And it ruminated around the world. And I agree with Jay's point about the contagion for China. I think that if it's not going to be driven from a systemic financial industry issue, if there is a crisis, it may be more linked to an unforeseen event, a cybersecurity event or a power grid event where people aren't able to get to their money. And that sounds like science fiction, but you know, there is a reality here. We're spending billions and billions on cybersecurity, and if you weren't able to get, you know, into your account one day, or the banks had to take a week holiday to sort something like that out, that would create a level of crisis.
I think you just put a bid in the market for bullion, for gold bars. I think they've just come back.
We just had a big one in Australia.
But again, Karen, you know, if the mechanism is an online mechanism for trading products, and the other point is, you sell what you can, not what, you know, at any point in this crisis, you sell what you can, not what you have to. So basically, gold would be in the fire line as well, wouldn't it? If you've got Asian central banks who are desperate to, yeah, if they're desperate to raise capital, and you've got gold bullion, and it's one of the few things you can sell because you know that there's a bid for it, you'd sell down your holdings. That's what it's there for. It's for a rainy day. The slam dunk that gold goes up in a meltdown elsewhere, I don't think that's the case.
Well, I want to come back to ETFs, and it may sound like I'm harping about it, but there's been a huge amount of herding, and I keep asking people, a lot of money has gone into ETFs, and that's pension funds, it's fund managers, whether they're active or passive, everybody's herding into ETFs. If you've got a recession even, and a market psychology changes abruptly, and people want to get out of risk and get out of some of their exposures, don't you have a problem with volatility being amplified? People trying to get out of some of these ETF products that are quite, seemingly quite liquid.
Yeah, there certainly could be a liquidity you know, crunch there, much like there was in terms of CDOs and CLOs, things that suddenly became very illiquid back then. You know, I look back and I think that you know, the Federal Reserve and the Treasury Department was very, very creative in those days, coming up with the ability to liquefy some of those sorts of markets. And I don't know this for a fact, but I'm sure our friends at the Federal Reserve have studied those sorts of questions a lot, and are thinking about game plans they can come up with in case something like that were to happen, to try to liquefy those markets.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.